Good evening. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we shall start off as we do with the S&P 500, which actually seems to be limping along a little bit at this point in time.
Yeah, it is. It's still going higher. We spoke about this last week and mentioned that the market has been trending quite steadily higher since August and a long time before that, but particularly since August, there's quite a steep upward trend that's evident over there. And I said on last week's show that if we were to project that trend out to the end of the year, it would mean that the S&P 500 would need to be at sort of close to 2,800 by the end of the year. So it just shows you how steep that trend is, and I think it's unlikely that a trend of that steepness can be sustained. I do suspect we're getting to a point where it's probably going to falter at some point soon. It does look as if the volatility has begun to pick up slightly over the last week or two. And also what interests me is the fact that there's this negative divergence on the RSI here. And also there's an RSI sell signal, which we discussed last week.
Yes.
So quickly looking at those two, first of all, the negative divergence happens where your indicator, your RSI in this case, makes a lower high, yet the price of the index itself has made a higher high. So the oscillator, or the RSI rather, is not confirming the move higher in the S&P 500 index, and that just tells you that the upward momentum is slowing down. And usually when you see a setup like that, that's usually what precedes a break in a trend. So looking at that, it won't surprise me too much if we do see this trend, that steep uptrend trend that I'm talking about there, begin to break to the downside.
I mean, it would be wholly natural to have some sort of a pause, because as you can, it's been so overbought for so long. There wouldn't be anything dramatic in any sort of pullback. No,
there wouldn't be, and I mean, you expect markets to move up and down and to have pauses along the way at some stage. This year has been particularly different in the sense that the S&P 500 has not had more than a 3% pullback for the whole year, which is very unusual.
And of course, last week we went through the mechanics of another options structure that you'd set up.
Yeah, we did, and you can see the payoff of that illustrated on the right-hand side over here. So it's a put spread option structure. It'll make money for us below 25.60. This is a structure that expires on, I think it's the 15th of December this year. So we've still got a little time to run this one. But anything below 25.60 we make money. Our sweet spot is 2,500 down to 24.60. So anywhere down in that sort of area would be ideal. There is still a gap in the chart at 24.60, and the theory is that these gaps generally do close on the S&P 500. So it's not impossible to think that that gap would close. It looks far away on this chart, but it's not in percentage terms from where we are now, 25.75 down to 24.60. What's that? It's 115 points, which is about 4 or 5%.
Yeah. And last week we also actually showed the US dollar index, which I know you want to talk about again this week.
Yes, I just want to update this because it is interesting. Last week I spoke about this US dollar index and said that it looked as if we were in the process of forming the right shoulder of an inverted head and shoulders pattern over there. And if it broke up above 94, then that would validate that inverted head and shoulders structure and point to further dollar strength to come. Now, following on 1 week later, you can see that we actually have seen a break above 94 on the dollar index here. So that does point to further potential for dollar strength. The projection to the upside is illustrated by that red arrow, which takes us to the 200-day moving average, and that's at around about 97 on the US dollar index. So what that is interesting, why that is interesting is because it could imply further rand weakness. It certainly is a headwind for the rand. And the other thing is, just going back to that S&P 500 chart, remember that the S&P 500 and the US stocks, particularly US exporters, do benefit from a weaker dollar. And we've seen the dollar trending a lot weaker this year. I mean, from the start of the year to mid-September, I think the dollar was about 12% weaker on the dollar index. So if the dollar starts to strengthen from here, that also would prove to be a little bit of a headwind for big US exporting stocks, and it could therefore also be a bit of a headwind for the S&P 500 potentially as well.
Yeah, which would be nice to it would be great to see this option structure work, and that sort of leads us into the trade that you're going to talk about this week. But before you get there, it's a look at the top 40, because obviously if there is a stronger dollar, weaker rand, better for the local market given the preponderance of rand hedge stocks.
Sure, that's it. So the top 40 index is very heavily skewed towards rand sensitive stocks. If you look at the top 5 shares that make up the top 40 index, they're all rand hedge stocks. Many of them have dual listings. listings on alternative exchanges overseas. So those are pure rand hedge plays. So a weaker rand definitely does play into the hands of the top 40 index. We've seen the top 40 break higher over the last week now. Last week when I sat here with you, we were talking about this range between 52,000 up to 52,600, and I said at that stage it could break either way, but the probability was that it would probably move higher. And the catalyst for that move higher was last week's mini budget speech, which was really not well received by the market at all. And you saw the rand losing 3% against the pound and the dollar over the course of last week. And of course that was a catalyst to push the market higher last week. And we've been now seeing this top 40 future trading around about the 53,000 area. It's been pretty sticky at that level for the last few days. And we'll revisit this in the next couple of slides on a trade that we're doing for this week, where we look at a shorter term graph and what the possibility is, whether it's a break up or down from here.
I know before you want to do that though, a look at the rand dollar exchange rate, because that is going to be instrumental.
Correct, and that's right. And I thought I'll bring this up this week because it is so topical at the moment, having weakened sharply over the past week since that mini budget speech. This is a weekly chart of the rand dollar exchange rate. So what that means is that every candlestick pattern that you can see here represents 1 week worth of trade. From early 2016, you can see there the rand strengthened, admittedly from extremely oversold levels after Nenegate, but the rand was strengthening throughout 2016 into mid-2017. It began to break weaker in September. The move above 13 Rand 20 to the dollar was actually a technical break, which saw the rand go weaker. And then, of course, now we've seen the currency move out quite sharply over the past week. So from my technical perspective, the next major area that we could see the rand moving to is 14 Rand 50. That's indicated of those swing highs there back in the middle and later parts of 2016, illustrated by that dotted line over there. And obviously a weaker rand is also supportive of the top 40 index as well.
Yeah, okay, so not great if you are SA Inc. Heavy, or if you're travelling overseas, but I suppose if you've got British American Tobacco or Renate or Naspers in your portfolio, it's all marvellous. Okay, guys, so that kind of tees us up into what you're going to be trading this week. Yeah,
so this is a little bit different to what we normally do. This is a very short-term trade. In fact, it's so short-term that by the time this program goes out tonight, it could even be at its target, or it could even be stopped out. We're not sure, we'll see. But this is a 15-minute chart of the top 40 future. And the instrument that we're trading this week is the DEC17ALMI future. Now, we've traded this instrument before, but just to reiterate and remind the viewers how it works, the All-Z futures, the main futures contract, represents 10 Rand per point on the index. So at 53,000, your main All-Z future is about 530,000 Rand in exposure. Now the All-Me is a mini contract. That is only 1 Rand per point. And it's quite popular for start-out traders, for retail traders to use who don't want to take an excessive exposure or don't want to take the full one All-Z future contract. You can trade an All-Me future, which gives you a lot less exposure. And as I say, it's 1/10 of the size. So one contract on an All-Me at this price now is about 53,000 Rand exposure that you're taking. And that's quite an interesting prospect if you're a retail trader learning to trade the market and wanting to get the hang of how the top 40 works. Now, in terms of this week's trade, what I've got here is a 15-minute graph. So that what that means is that every candlestick pattern here represents 15 minutes worth of trade. So this graph only goes back to last week, effectively. And you can see 3 days worth of trade here where the market really has been very range-bound, pretty much going sideways, not particularly exciting. Within that, I see an inverted head and shoulders pattern over here. You can see that. And the upper area where there's a lot of resistance is at 53,150. Now, my expectation is that the market will probably break to the upside from here. I say that because it is in the context of a broader rising trend. I do still think there's a lot of trapped shorts in this market, and the market will always inevitably go to the point of maximum pain, unfortunately. And that implies that those who are short and are still waiting for the big pullback probably might still get squeezed out of this market. And for that reason, to me, I place a higher probability on the likelihood of a break to the upside. In other words, a breakthrough 53,150. So in order to trade this, what I've done is I've gone long of 3 All-Me futures. So remember that the All-Me is 1 Rand per point. So effectively, I'm doing 3 Rand per point here at a level of 53,066. So what's that? It's an exposure of about 160,000 Rand that we're taking effectively. My stop loss is 52,900, so it's fairly tight. That is basically a move below these candlestick lows that we've seen over the past 2 days. All right. If it starts to break there, that would imply then it's starting to break below the bottom of the right shoulder of that inverted head and shoulder structure. Then I don't want to be long. I'd rather just get out of that trade.
Yeah.
And my target is 53,500. So if it breaks out above 53,150, then at 53,500 would be my projected target here.
Garth, and having brought up a 15-minute chart, does this suggest that this could be a trade that is literally a day in the making?
Well, it could take a day or a couple of days to resolve one way or the other.
Okay.
I'm pretty sure that by the time we sit here next week, we'll know one way or the other whether we've made a profit or a loss on this trade. It's unusual to see a market be so range bound for 3 or 4 days in a row like this. I mean, you can see the trading range for the most part hasn't been more than about 300 points for the last 3 days, 3.5 days, which is quite unusual. You don't see that very often. But in my books, I suspect this is probably a sideways consolidation or a bit of a consolidation in time that then eventually resolves itself to the upside. Yep. And of course, if I'm wrong, then I've got a stop loss which is fairly tight, and we're not going to lose a lot of money on this.
Yeah. We'll take us through the mechanics of the trade.
All right, so I've gone long at 53,066. My stop loss at 52,900. So what that means is that my risk here is 166 points on each contract. So what it effectively means is 166 Rand per contract that I stand to lose if I get stopped out here. My risk that I'm willing to take is about 500 Rand, so that's 0.5% of the capital that we have at our disposal. So if I take that 500 Rand risk, divide it by the 166 Rand risk per contract, that means we can do 3 contracts here. Yeah. And that's what we've traded. My target is 53,500 if it breaks to the upside, and therefore that means my risk to reward ratio on this trade is 1 to 2.6.
I mean, this is a really tiny trade, isn't it? So if 500 Rand is that essentially, pretty much the maximum that you're prepared to risk. That's minuscule. I mean, yeah. And is it the trading action of the last while? Is it sort of dictating a totally different approach? So you rather take much smaller positions, much tighter stop losses, and trade within these kind of smaller contracts and say, taking an Aussie contract? Yeah,
look, not always, but I think in the current situation that we find ourselves in, I've decided to go very conservative here. It is approaching the end of the year. We've got 10% profit sitting in our local portfolio, which is okay. I don't want to lose too much of that if things do go wrong. Yeah. Also, given the size that we're trading, remember our portfolio is sitting at about 110,000 Rand in terms of our local Rand-denominated portfolio here. To do one full Aussie future would mean I'd be taking a position of 530,000 Rand, which is 5 times bigger than the capital that we've got in our account, which is quite a lot. So, to me, going at it like this is just probably a little bit more responsible. Yeah. And yes, it's not going to move the needle much either way. I mean, whether we lose a $500, that's not going to change things for us. Also, if we make our maximum profit here, we would end up making about 1,200 Rand. It's also not going to move the needle much. But I think, you know what, if it does work, and if we get that upside breakout like I'm looking for, it does add an extra 1% onto our profit for the year to date, and every little bit helps. Yeah.
Okay, so what does the portfolio look like? You sort of alluded to it already, up about 10%.
Yeah, so locally in Rands, we're up 10% for the year to date still. You can see we've got that put spread structure, which is most likely going to end up being worthless, I think. And then the December futures that we've just done on this show now, we long one contract, we long 3 contracts of the ALMI at 53,066. And then our offshore portfolio, still struggling along here. I guess I'm waiting to see whether this put spread option structure on the S&P 500 can work for us into the end of the year. We only need a 3% pullback between now and the end of the year in the S&P 500, and that honestly could wipe out all of these losses and put us actually back in positive territory for the year to date. On the offshore portfolio, it's been very difficult. I've got that offshore portfolio, pretty wrong this year. But that's where we sit at the moment.
Yeah, well, let's cross fingers. And then just a reminder, a weekly alert that you can get by going onto the site.
Yes, if you go to traderscorner.co.za, you go and look in the middle of the page there, you'll see there's a link to a free weekly email. Just click on that, enter your details. It'll take you about a minute to register, and then we'll send you an email every Tuesday at lunchtime detailing what's coming up on the show for that week.
Great, Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.